Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. The S&P climbing to a record high with tech shares driving the rally, and especially Amazon. Daily case counts of COVID-19 and hospitalization rates seem to be improving. But there is still no deal on more stimulus, which means the second half of the year remains more uncertain for e-commerce and retail giants that benefited from more money in American wallets earlier this year. For more on the day in the markets, I want to bring in Bloomberg's Abigail Doolittle, who's been following all the action in the S&P. Obviously, a big day there, catching up to the NASDAQ. Tech certainly helping. Talk to us about how tech drove this.
Well, we certainly do finally have this record high, Emily. Market watchers have been waiting for it on the S&P 500 for basically a week now, very closely, but longer, because the NASDAQ, as you were just mentioning, has been hitting record high after high. So tech, as you were mentioning earlier, especially with Amazon, but some of the other tech names, really driving these gains for the S&P 500. At one point this morning, the S&P 500 briefly went negative after putting in an all-time high, telling you investors are balking a little bit. So let's face it, we have this wall of worry. Not only do we have no stimulus, a second deal is not on the table quite yet. We also have election jitters. We have U.S.-China trade jitters, the possibility of a second wave. So it was not a robust finish for the S&P 500. Nonetheless, a record high. One divergence that's a little bit worrisome is the fact that a lot of the indexes closed down, including the Russell 2000 down 1%. The last time that index put in a record high, Emily, it was almost 2 years ago. The same thing with the Dow Transport. So it's really the haves and the have-nots. And as you know, technology is really the land of the haves, especially in 2020. On the day, you were mentioning Amazon, its best day in about a month. And it's not entirely clear what was behind this, except for more bullish momentum. But 13 F filings around hedge funds showed that hedge funds are really favoring Amazon, that 104 hedge funds have at least 5% of their disclosed assets in Amazon. Go figure why it's up so much this year. Workday also had a very solid day. The cloud company, a second up day, one of the big winners within the S&P 500 and the NASDAQ. Zoom up 4%, and RBC says that they see them posting significant second quarter revenue upside when they report. And JD.com, they did report a great quarter, up 5%, lots of price targets rising. And it seems that the virus is helping all of these stocks. These, of course, are all stay-at-home stocks, but JD.com, as China is really embracing e-commerce. So it was a stay-at-home sort of day that did help the S&P 500 find that new record high.
All right. Meantime, another talk today. Oracle now weighing a surprise bid for TikTok's U.S. assets. Larry Ellison, the founder of Oracle, has been a supporter of President Trump, and shares did rise on this. Talk to us about the moves in the stock.
Emily, this is a really interesting story. When this headline crossed last night at some point, 7, 8 o'clock, I was sort of surprised because it's interesting. Oracle, as you know, is the world's second largest software company. What are they going to do with TikTok? But apparently they are interested enough to cause that stock to pop higher on the day. In fact, its best day in 2 months. It's really kind of been a laggard because the top line growth for this company, slow, low single digits. So, it makes sense. Perhaps they're looking for a way to diversify, even though it's not entirely clear, at least to me, how they would integrate that immediately. But Microsoft, of course, has been the company that's been thought to buy those TikTok assets potentially or put in a bid. Twitter was mentioned as well. And, here's the stock performance over the last year between Oracle and Microsoft. Oracle flat, really up just about 0%. The last all-time high for Oracle more than a year ago. Microsoft, of course, record high after record high. The stock up about 56% over the last year. So it seems that Oracle really is trying to figure out a way to perhaps bring more growth if they do, in fact, put in a bid for those TikTok assets, Emily.
Right. Certainly an interesting potential buyer. Bloomberg's Abigail Doolittle, thank you so much for that update. Joining us to talk more about Oracle as a potential suitor for TikTok is Kirsten Martin, professor of technology ethics at Notre Dame. Kirsten, thank you so much for joining us. As Abigail mentioned, Oracle is an enterprise-focused company. It doesn't seem to make a lot of sense to take on a totally consumer-facing company like TikTok. What do you make of this potential bid of Oracle as a potential owner for TikTok's U.S. assets?
Thank you, Emily, for having me. I think it's interesting to think about TikTok has two places where it could get value. One would be any consumer-facing integration, such as I think Amazon announced just kind of pushing this Alexa skill to be able to integrate a voice command to get TikTok users to open up TikTok. You could imagine Microsoft using it the same way of having their consumers more easily use their products with TikTok. But the other side, which may be what Oracle is looking at, is the vast amount of consumer data. Ironically, the thing that made the Trump administration concerned about TikTok is all this information that TikTok and other apps grab on us with our location and our contacts, our preferences, who we are talking to and what we're talking about. So Oracle does have, an ad tech business. They have a digital and online advertising solution. So it would be extremely valuable to them to be able to sell this type of data or access to this data to other companies, not going into the consumer market, but actually staying within the commercial market and being able to leverage this consumer data on the back end. Again, ironically, what the Trump administration was worried about was the exploitation of consumer data, but that would be a play for political and commercial advertising.
Well, and this is an incredibly political situation here. Obviously, the president has ordered TikTok to sell these U.S. assets. Oracle founder Larry Ellison has been a big supporter of President Trump, just held a fundraiser for him at his estate back in February. And, what do you make of that, given the president may well have a say in who ends up buying this company? Does that give Oracle an edge over Microsoft?
Since the whole process appears to be so politicized, it's not clear what TikTok does any different than every other app that young adults and teenagers use. Weather apps, gaming apps, social media apps, they all gather the same data. If anything, TikTok keeps it to themselves and doesn't sell it to data aggregators like the other ones do. So since there doesn't seem to be a good business reason as to why TikTok needs to divest itself of its U.S. assets, it wouldn't surprise me if the solution wasn't equally politicized. So it doesn't, to your point, if the idea is somewhat politicized as to why TikTok needs to divest itself of U.S. assets, it wouldn't be shocking if the reason or the solution of Ellison and Oracle was just as politicized to kind of come in and save the day for Trump.
Well, the main difference between TikTok and other social media apps is that it's owned by a Chinese parent company, and President Trump has expressed national security concerns. I mean, you're a professor of tech ethics. The ethical issues here seem incredibly murky, especially for, a president that is facing re-election in a couple months. How do you parse out the sort of ethical implications of this situation?
So I would argue that all of the data collection for all these types of apps is problematic. The collection of our location, our contacts, who we talk to, what we talk about, the collection of all that data on all of our apps, putting it into data aggregators, and then selling that information to the U.S. government, to foreign entities, I think all of that is problematic. The point would be that I'm not sure TikTok is any different than those other entities, if that makes sense. So I think that I would agree with Trump in that the overall data collection and selling and sharing is a problem. And I think more attention needs to be spent on the entire ad network and data aggregator industry. And if TikTok is a way that we start talking about this, that's great. But the issue of whether or not our data gets in the hand of foreign entities is not only through TikTok. And that's what I would say, that it's not clear why TikTok is being singled out, other than it's politicized, because there's other apps and data aggregators that do the same type of thing, and equally wrong. So I don't mean to say that they're okay in one hand and not another. I would still say the overall surveillance industry of consumers is wrong. It makes us, susceptible to manipulation by political advertising, commercial advertising. But it's not clear why TikTok is different than the other apps. Equally wrong, but it's not clear how they're different.
All right, Kirsten Martin, a professor of tech ethics at Notre Dame. Thank you so much, Kirsten, for joining us. All right, coming up, Honeywell sprung into action to make N95 masks at the start of the pandemic. Now their tech is essential in helping to get universities, events, schools, airlines back up and running. We're going to speak to the CEO of Honeywell next. This is Bloomberg. When it comes to the global response to COVID-19, Honeywell's technology has been front and center. Their technology touches everything from N95 masks to airlines to universities. I caught up with Honeywell Chair and CEO Darius Adamczyk earlier today and talked about the company's focus as the pandemic evolves.
Initially, when we first entered the pandemic, it was really all about getting the N95 masks as quickly as we possibly could, and we really played a front and center role as early as March and into April, and quickly expanded our capacity. And obviously, that was sort of priority one. But that also quickly shifted because some of the other things that we do is we make some of the sensors for the ventilators. So we had a big backlog of that instantly in April. We actually made our own ventilator as well for emergency use. So initial focus was how do we respond to this crisis that we're in very, very quickly. But now our focus is much more on how do we get people back to their workplace, back to flying again, back to having fun again, back to going to stadiums again. And that's really a complete shift. So now we're working with a lot of airlines, a lot of the teams in the NFL and the NCAA to get their stadiums ready, working a lot of building owners, how to get their employees back in a safe manner. And we've got different user experience, both for the occupants as well as the owners. So we've really been all over the board from kind of immediate response to the crisis to now to preparing to emerge from it and returning to a state of near normal.
You opened up factories in Arizona and Rhode Island to make N95 masks. President Trump even visited one of those facilities back in May, though he wasn't seen wearing a mask in the video or photos at the time. How closely are you still working with the White House on PPE in particular?
We've had a very good partnership with the White House to help them out any way we can. We quickly opened up the facilities, as you mentioned, Rhode Island and Phoenix, and we're trying to help out any way we can. We're helping them also with some surgical masks. That was some of the latest discussions that we had, and open up some new capacity to make those. But we're continue to have discussions and trying to help the country in any way that we possibly can.
There's still a huge amount of near-term uncertainty. Nobody knows exactly what the future looks like, potentially even long-term. What do you make of the president's evolution on masks, given that initial interaction you had with him?
Yeah, and I think the president is supportive of masks. That based on the data that I've seen, they help to limit the spread. We're certainly encouraged by that, particularly being N95 makers. We certainly practice that. I mean, we have some of our staff working in offices. Most are not, particularly in North America yet. But we certainly encourage and require the use of masks wherever we are in an office environment.
You're also in touch with airline CEOs regularly. What is your role in trying to get passengers back on flights safely if they need to fly?
But this is all about passenger comfort, passenger safety, and I think the airlines have done a terrific job in that respect. I mean, we're helping them with sterilization of some of the air. You may have seen some of the kind of robot-like devices that really roam the aisles with ultraviolet light, which actually help sterilize the cabins and can do so in a matter of minutes in between flights. We're also working on some solutions to have cleaner air within the aircraft itself. with some of our technologies, which are a little bit longer term in nature, but also very basic things such as PP&E kits for the passengers themselves. So we have sort of full range of solutions from the very sophisticated and technical to some very basic things such as wearing masks.
Now, many traditional industrial companies are turning to software, and Honeywell is one of those. Why is this shift happening, and what are the opportunities specifically that you see for Honeywell?
The basic foundational element throughout all our businesses is controls. I mean, whether we control aircraft, control buildings, control industrial plants, then you control things through hardware and software. So software has always been part of the fiber of who we are as Honeywell. As a matter of fact, we have more software engineers than any other type of engineers on our staff today, and we have way north of 20,000. So the transition to using data, because when you control something, you're obviously connected to everything, and using it in a different manner than to control that process is a natural evolution of the company, and that's why we formed our Honeywell Connected Enterprise, our Forge IT stack, and building out our connected solutions.
Right, you're talking about the cloud there. In that case, how much revenue, let's say, would you expect to drive Honeywell's sales? How much would software drive that revenue in 5 years?
Right. So right now we have, $4 billion business in software. Some of that is embedded, some of it is independent. We expect a double-digit growth rate for our software business. We've been able to achieve that. We've actually done, much more than 10%. And that's the expected growth rate. We hope to augment that through some bolt-on acquisitions as well. So it's going to become a much more meaningful part of our portfolio going forward.
What kind of acquisitions are you, or would you consider? Anything outside of your core business, like aerospace, energy, buildings, automation?
Well, obviously, we love the platforms that we're in, so we always look for adjacencies and bolt-ons, which sort of says, it's close adjacencies. We look for software assets, but not just software assets. We think that with the strength of the balance sheet that we have today, this is going to be a bit more friendly M&A environment, particularly the A part of it. So we're going to be active, and we're going to be very active in the second half of this year, and hope to augment our businesses, certainly the digital businesses, but potentially some others as well.
Darius Adamczyk there, the CEO of Honeywell. All right, coming up, the App Store Battle Royale. Epic Games has sued to overturn Apple's ban on its popular game Fortnite. Will Apple give in? We take a look at the numbers and if the future of the App Store is at risk. That's next. This is Bloomberg. The saga continues. Epic Games is looking to block Apple from removing its Fortnite game from the App Store. This after Apple removed the popular gaming app last week, citing that Epic wasn't playing by the rules. With us now to look at the App Store numbers, Apptopia CEO Eliran Sapir. Eliran, who do you think is losing here?
Well, there's two things happening. I mean, on the surface, it looks like Apple is really bringing, or rather, Epic is bringing the battle on behalf of small developers, right? Like you have this evil mega corp, so to speak, and Apple is bringing the battle to Apple. But that's on the surface. I don't think that I don't think that's actually the case when you look a little bit deeper. When you look underneath the surface, what you're going to see is it's much more complicated. You have to look at who Epic is. Epic is owned, the second largest owner in Epic is Tencent, one of the largest tech corporations in China. And they're bringing the battle, right? It's really what if you look at it, they're bringing the battle from Chinese tech against American tech. And Tencent is not a company like Spotify, and Epic is not a company like Spotify that cannot pay 30% fees, right? They can pay the store fees. They're selling digital goods. Their margin is extremely high, and they're tremendously benefiting from the platform. And so what they're doing is pretending to bring this battle to Apple on behalf of small independent developers, but really what they're angry about is they don't want Tencent success to be Apple success. They don't want to pay 30 cents of every dollar to Apple that they make. And this is what's happening, right? This is what's happening here is you have you were talking before about TikTok and the whole political situation that's happening with TikTok. And I believe, at least what seems to me is happening here is you actually have Chinese tech versus American tech. This is China bringing the fight to the U.S. in creative ways, And this is
that's interesting. So hang on, that's quite an accusation. You think that Epic Games and Tim Sweeney, the CEO, is doing this purely to give Tencent an advantage?
Absolutely. I think this game, Tim Sweeney made his money, so and direction comes from the top. So this is a Tencent game to play, and they're playing it. They're masters of playing these games, and this is their game to play. And this is what's happening. Tencent has a strategy, and this strategy is to continue to battle American tech at every front. And this has been occurring across. And by the way, let's think about Epic for a second. Epic is not Tencent's largest moneymaker. They have many, many other moneymakers on the store. So they picked Epic, which is one of many Tencent assets, and they're using Epic to essentially front the attack on this thing. Now, are they using the political turbulence that we have here against us? Definitely. I mean, they're making Apple look like that evil mega corp, right? This company that doesn't allow developers to succeed, right? It's not true. Go ahead.
By the way, it's not just Apple. Google has also pulled Fortnite from the App Store. Apple, gets a lot more of the attention, but there's a potential, if this continues to spin out, that it's all of Epic Games apps that are at stake, not just Fortnite, but House Party. My kids aren't playing Fortnite yet, but they are on House Party talking to their grandparents, and that would be kind of a big blow if they couldn't access that from the App Store. Do you expect that this tactic, if you will, is going to work on Apple and Google, or that they're going to stick to the policy that they've had over the last several years that the App Store has been in existence? And what about the criticism that Apple and Google do enforce their rules inconsistently at times?
I think there are a lot of edge cases. I'll start from the beginning. Look, Apple and Google both together decreased friction for both consumers and developers, right? Like, they have enabled developers to ship millions of apps to billions of consumers at an unprecedented pace. I mean, it's such a short, as you think about the App Store, it's only been around for about 10 years. And so it's an unprecedented pace that these apps have been shipped. We've never seen so much software being shipped. And to ship that software, it's not only to enable a payment gateway. You have to provide SDKs, you have to provide tools for developers, analytics, they're hosting the actual software. Almost everything is running through their platform. So it's tremendous service and value to developers and consumers. And they do deserve a significant cut. Now, can they get a significant cut at every step of the way from every publisher? No, there are hundreds, thousands of edge cases, right? Netflix, Spotify, they can't pay 30%. They don't have that margin. But do you come at the App Store and the Google Play Store with a machete?
Okay.
No, yeah, you use a scalpel.
We're gonna have to leave it there. Thanks for giving us your thoughts straight. Ellie Saper of Apptopia, thanks so much. We'll be back with more of Bloomberg Tech after this quick break. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Walmart and Kohl's, two big retailers, out with earnings today, but Walmart warning that the second half of the year looks more uncertain without stimulus checks in consumers' pockets. Joining us to break it all down, Bloomberg opinion columnist Sarah Halzek, who covers consumer and retail industries. Let's start with Walmart, Sarah. Talk to us about the quarter that was and whether or not Walmart can keep up given that stimulus money is drying up.
Yeah, so Walmart had a quite strong quarter, 9.3% increase in comparable sales and 97% increase in e-commerce sales. And they said it was quite broad-based, but actually general merchandise was the thing that was really driving the train here. So that's items like lawn care products, sporting goods, toys, apparel, that kind of thing. And that's good for Walmart because those are more high margin items for them, which is particularly important in that e-commerce business where they're really looking to shore up profitability. But that question of the stimulus checks is a big one. The retailer did call out repeatedly that sales were stronger in the beginning of the quarter than at the end of the quarter, and they believe a big part of that was once those checks started tapering off, people started normalizing their spending. And that could be bad news for Walmart and many other retailers if Congress doesn't pass any other legislation on that front going forward.
All right. Kohl's, on the other hand, not a great quarter, certainly not as slick of an online operation as well. What are the trends there?
Yeah, so Kohl's, they did see a 58% increase in their digital sales, but that is off a pretty small base, right? And it simply wasn't enough to offset the strong decline in traffic that they saw to their physical stores. And so Kohl's is just in a really tough spot. Apparel is one of the corners of the retail industry that has just been hardest hit by the pandemic, with kids not going back to school in person in a lot of places, and people not having weddings, parties, vacations to dress for. Clothing is just a really hard sell right now, and Kohl's certainly felt that in the quarter.
So talk to us about what this means for the rest of the retail industry. Obviously, there are more traditional physical retail players who have better online operations, and then there's Amazon, the elephant in the room. Do you see sort of some big players emerging based on their success, based on their leadership in online sales, and can they ever catch up to Amazon?
I'm not sure they can ever catch up to Amazon, but I do think that we see the dynamics in the environment right now really favor the retailers that are one-stop shops, the Walmarts and the Targets of the world, places where you can get your groceries, but also get some electronics and get some toys for the kids. We see that in this environment, people are afraid to go to stores, and they're consolidating their trips, and they're wanting to get as much stuff as they can at one place. So that's really tough for drugstores, for example, that usually got a lot of fill-in trip traffic, or also for mall retailers that typically specialize in one thing. So I think a strong time for big box retailers and a difficult time for everybody else.
Now, just weeks into the pandemic, there was talk about tens of thousands of physical retail stores having to close or closing as a result of this. It is happening. What does the mall, what does the street look like in a year?
It's going to be completely unrecognizable. We certainly have had a number of mall retailers say they are going to close hundreds of locations, and some of the ones that are closing, it just could end up being a domino effect where no one, even the retailers that are surviving, don't want to be in that mall anymore if it's half empty, right? So there certainly is going to be a lot of change, but it does result in some opportunity for the retailers that remain. That's something that Kohl's, for example, talked about today. They didn't name specific competitors, but I think they were alluding to JCPenney, which is currently bankrupt and about to close a bunch of stores, as perhaps they could steal some of their market share to pad their own sales. That's something that Kohl's was able to do successfully when the Bon-Ton, a department store, went out of business recently. So there will be pickup opportunities in sales for the ones that remain as some of these other retailers fall victim to the pandemic.
All right, our Bloomberg opinion columnist, Sarah Halzek, stark words there that the mall will be unrecognizable after this. Thank you so much. Moving on, Adobe, the company perhaps best known for Photoshop and PDFs, is now using its technology to combat deep fakes. Adobe is part of a content authenticity initiative in partnership with Twitter and the New York Times to identify deep fakes, misinformation, and disinformation. I spoke with CEO Shantanu Narayan earlier today about how that effort is going.
We have to step up and demonstrate leadership. As you know, people use Adobe to create the world's content. And we really wanted a partnership, not just between the content creation companies like ourselves, but also the publishers of that content, the people who are actually distributing that content, and finally consumers. And I think it's the responsibility of the industry to step up, much like was done for advertisements first, where you can determine the veracity of an advertisement. We think the same thing should happen with content. And you saw that happen with traditional magazine publishing, where you had a byline, so you clearly knew who was the author of a piece of content. And so the way we envision it is, as part of Creative Cloud, if you use our tools, you can digitally sign or stamp a piece of content that you create. Then the publisher of that content will show if that has been altered and modified, as well as the distributors of the content. But ultimately, it'll also have to be the consumers like you and me who says, when I see a piece of content, I want to see the authenticity of it. So I think this is a collaboration. We're taking the lead on the tool side. Certainly, Twitter as a massive distributor of content, and New York Times as a great online presence. But I think you're continuing to see more momentum in this because the need is there from the consumer to know whether this content has truly been created and modified. And last but not least, I think we're also looking at artificial intelligence and machine learning that'll help us determine when and how that content was altered.
You also recently announced a ban on political ads for the Adobe software that places and manages online advertising. Why did you do that?
Well, on the advertising front, again, we have some very clear policies. And in the cases of ads where they had violence as part of it, we thought, again, that that was our responsibility to step up and not allow the promotion of violence. So it's one of these areas we're all in uncharted territory as we step up. And, but we take this very seriously, and we just deemed that that ad was not appropriate for the audience.
Twitter has done the same thing. Facebook, meantime, does still take political advertising. Is that the wrong call?
I am one of those executives who focuses a lot more on what we do and our relationship with the customers. And, I think it's up to every other company to understand what it is that they do and what their policies are. So I think we're stepping up appropriately, and we have the right sentiment for our audience.
Given your insight into deepfakes, disinformation, and what is out there, how worried are you about the upcoming election?
Well, I think as it relates to the election, for me, the first and foremost as an immigrant to this country and a citizen of this country is asking everybody to go out and vote. And I think that's, the most important part, which is it's our civic responsibility. I think as it relates to the content that people look at to make the appropriate informed decisions, I think, everybody will have to step up and demonstrate what's authentic versus what's fake. And I think, most citizens have a pretty good innate sense of that. But I think the most important thing is to make sure that your voice is heard, especially in this time.
You've been outspoken on immigration issues, on the Black Lives Matter movement. What are you doing to get more Black executives hired at Adobe and on the board?
We had a fantastic set of conversations, including this week with our Black Employee Network, who have really stepped up and helped us articulate what our strategy is and how we increase it. I have two areas in which I'm particularly passionate about. The first is making sure that we go to the colleges and get the right talent associated with both Black employees, African employees, and frankly, all underrepresented minorities. And we are going to double down on making sure that we get that appropriate talent. And then once you get the talent, it's all about promotions and nurturing them. And in all of these areas, in conjunction with this network, and Gloria Chen, who's the CHRO, and I are personally sponsoring this, we will make progress, much like we did, as you know, with gender. And in genders, we weren't really focused on just gender parity, but we were focused on opportunity parity. And I think we were the first company, one of the first companies to publish all the data to demonstrate that we have not just gender parity, but opportunity parity. And we're going to do the same thing with the Black employees that we have, as well as underrepresented minorities. It's the right thing to do, and it's the right thing to do across the globe.
Absolutely. Shantanu Narayan, CEO of Adobe there. All right, coming up, the meal kit delivery service, Blue Apron, seeing a massive turnaround during the COVID-19 lockdown. But will it last? We'll hear from Blue Apron CEO Linda Kozlowski next. This is Bloomberg. The COVID-19 crisis has led to a surge in food and meal kit delivery. Meal kit delivery service Blue Apron seeing a 10% year-over-year growth in the second quarter revenue, adding 20,000 new customers. Shares have soared as much as over 600% since hitting a 3-year low back in March. For more, we're joined now by Blue Apron President and CEO Linda Kozlowski. Linda, thank you so much for joining us. Obviously, the pandemic has been good for the meal kit delivery business. Looking out over the next 6 to 12 months, given that uncertainty and lockdowns are going to continue, do you see business getting potentially even better ahead?
So we've been very focused on a long-term growth strategy that we started, before the pandemic actually hit after I joined the company last year. And we were already starting to see the fruits of that in Q1 with our first sequential quarter-over-quarter growth. And so really what we saw in the pandemic was an acceleration of some of the trends that we were expecting to see in the second half of the year as far as year-over-year growth, with significant growth both in customers and in revenue, but also, of course, in profitability as well. And that's something that we're really proud of and focused on leveraging as we think about maintaining and developing that customer base going forward, because obviously that great quarter has given us, in conjunction with the equity raise that we did, the flexibility we need in order to execute our long-term growth plan, which really was all about building the right products to both engage new customers and retain existing ones. So we're seeing the continuation in behavior, not just from COVID-19, but also from people who are trying meal kits and seeing the value in them as an opportunity to continue to actually build on that, use the product work and the strategy work that we're doing to both keep and attract new customers going forward as people start to see the benefits of meal kits.
Now, going into this, people had written Blue Apron off in a way, and the stock had been destroyed. What about when we come out of this, when restaurants reopen? Do you see holding on to those new customers and that demand?
We've been doing a lot of internal research, but also looking at the external trends. And the external trends clearly point to the fact that people intend to cook from home more. That this, has reignited their confidence in the kitchen. That's, reintroduced them to family time and being able to cook together, being able to eat healthier because you're preparing food from scratch. So for us, we definitely see a continuation of at least a portion of this, if not significantly more, as things go forward, because even as things open up, people are going to be very, very concerned about, too much exposure or spending time in public. But even after that, there's been a fundamental change in habits, and people really are seeing the value of cooking. And they're also realizing it's not that hard, especially if you use something like a meal kit where you can remove the planning, you remove the significant effort in being able to go procure the ingredients, but then also you remove a lot of the food waste and having to sort of have this refrigerator full of ingredients that you don't know what to do with. So we definitely see some continuation even as things start to open up and things start to change. And we've been managing for the long-term sustainability of that for quite some time.
Now, with business booming, that has led to a surge in just trying to meet that demand. I'm sure that getting these kits prepared and employee safety has been a challenge. How are you making sure that the kits are safe, that employees and the people who are putting all of these things together are safe?
Employee safety is our absolute top priority. We have a lot of employees who go in every day to make sure that these kits get made. The interesting advantage is we were already an FDA regulated and SQF certified facility, which are some of the highest food safety standards in the world. So we already had so many measures in place because of the fact that we're dealing so much with fresh food and such a critical role. So the elevated sanitation procedures that we put in place in order to protect employees, and protect the product from any impacts of COVID really were above and on top of an already very, very rigorous standard. And so that layering really made it easier for us to implement some of the changes we needed to make to keep our employees safe. But that is really the number one priority, because obviously we're dealing with something that is coming into people's homes and feeding their families. And so every single thing we do in every step of the process, including even our suppliers going through the same certifications and checks that we go through, is a critical part of how we keep our employees safe throughout the process.
Now, you were the COO of Etsy before this. You've worked at Alibaba. How do you think more broadly the pandemic will change e-commerce going forward?
I think a lot of people are seeing the benefits of all the different ways that e-commerce can help improve their lives. You know, a lot of people who are nesting right now and just feeling like, okay, my home isn't just where I come and sleep at night after all the things that I'm doing during the day. This becomes my workspace, my social space, my sort of sanctuary at the same time. And so I think that investing in things like, you know, decorating and making your home a better place, but then also investing in the food and investing in those mealtime moments and really creating much more mindful moments around things like food are really top of mind for a lot of people. So I think e-commerce in general has benefited from the fact that people are seeing the need to bring things home. I think the next thing that you're going to see is more and more evolution, and this is something we think a lot about, of where do these products come from? Where does my food come from? What is the environmental impact of what I'm doing? So that's a big part of why we focus not only on the quality of the product, the quality of the meats, the quality of the produce, but we're also focusing a lot on food waste and how do we lower that impact as much as possible, which is why meal kits were deemed a third lower carbon footprint than going to the grocery store, because we reduce waste at every part of the supply chain. So I think that's the next phase you're going to see in e-commerce, is how can you continue to minimize the waste that comes from e-commerce while also taking advantage of the opportunities for how e-commerce can actually help serve families and people at home.
All right, Linda Kozlowski, CEO of Blue Apron. Thank you so much, Linda, for joining us.
Thank you so much.
All right, still ahead, Apple taking its music offerings global. We're going to look at what is new and their plans for the future with our own Mark Gurman. That's next. This is Bloomberg. Apple is expanding its music streaming services by adding 2 live global radio offerings, Apple Music Hits and Apple Music Country. For more now on this is Bloomberg's Mark Gurman, who of course covers Apple for us. Mark, how does this fit into what Apple already offers, and how significant or used do you think these radio channels will be?
Yeah, I mean, this is another element that they're adding to Apple Music to help compete with Spotify. You know, as you know, Spotify is the market leader in streaming music and online radio and playlists and such. And Apple Music has been improving year over year since its launch about 5 years ago now. But these 2 new radio stations, one is called Apple Music Country, the other Apple Music Hits, should give a little bit more curation and a touch that some users will appreciate, keeps people more glued into the Apple Music, $10 a month subscription. And in addition to those 2 new live shows you mentioned, they are renaming their main radio show, which from the beginning has been called Beats One, to Apple Music One, which makes sense.
Meantime, I have to get your thoughts on the ongoing battle royale between Epic Games and Apple and Google as well. We had a guest on earlier, the CEO of Apptopia, who said that, claimed that Epic is doing this only to boost Tencent, which owns a large stake in Epic Games and has its own app store and, potentially competes with Apple's App Store and Google Play. What's your take on that?
Yeah, I haven't heard that personally before this. I don't find that to be true, at least on the Apple side. On the Apple side, you can only have the Apple App Store on the phone, so it's not like they would ever allow the Tencent alternative. But perhaps, that assertion holds up on the Google side, on the Android phone side, where the Tencent App Store, the Tencent App Marketplace is a real competitor in some regions of the world, obviously, of course, China, to other app stores. Google Play is not available in China, so it's really unclear how or why that would be true at all for Apple, but maybe a little bit for Google.
Meantime, Apple is now potentially threatening to terminate Epic's pipeline to some of its other apps, and not just Fortnite, House Party as well. I mean, this has become quite extreme in terms of the back and forth here. What's the latest on how you expect this to play out?
Yeah, so there's two things going on here. What Apple has basically told Epic Games is they're going to, kill their developer account in 2 weeks as of 4 days ago, so August 28th or so. And what that would mean is that their other applications would be pulled from the App Store. They have one other iPhone or iPad game and one Mac game, obviously both less popular than Fortnite. So those would be gone. Obviously, you won't be able to get updates to Fortnite. And then the other thing is that they would pull developer tools used to develop something called Unreal Engine. That's a graphics framework that lots of third-party app developers use to, support graphics and gaming in their own apps that have nothing to do with Epic Games. So they'd be cut off from those tools, and obviously that's a big part of their overall business as well. So Epic Games, if Apple stands firm and if Epic Games doesn't submit a new update or keeps, attacking Apple, it seems like Apple's just going to remove their developer account. But my guess is that, Epic eventually relents, and then later down the road, Apple makes some changes to the App Store to appease everyone else.
All right. Well, I knew you'd have a prediction of sorts. Bloomberg's Mark Gurman, thank you, as always, for joining us. And that does it for this edition of Bloomberg Technology. Stay tuned. Bloomberg Daybreak Australia is next. I'm Emily Chang. This is Bloomberg.